All right, well, I hope you guys really enjoyed this. I've got some time for questions and I've seen them coming through. So I'm gonna spend a little bit of time today. We got about 6 minutes left, but I think if the questions are coming in, we'll stay a little bit over. Try to keep your questions to more general questions. We can have conversations about your specific situation privately with an investment counselor directly. So think about the benefit for the group and keep them kind of general if you can. All right. How do you balance your strategy when you're just beginning your investment portfolio? We're now 50 years old and don't have a lot of time to build a large portfolio to become job optional in the near future. I think this is the really critical question. I mean, I think that reality check is absolutely something that you have to do. This can't just be created overnight. So if you're looking at the numbers and you see, wow, I don't have time or capital, how can I make this happen? You might have to look into more active strategies. You might have to consider flipping, to get additional equity. Obviously, that has some tax consequence that could make it more challenging, but you might need to consider a more active strategy. Maybe it's acquiring properties that are a little more distressed. They're not turnkey homes where you can force some equity so that you can expedite the growth. A good strategy I've heard mentioned, and one that I think has a lot of credibility, is to, if you're short on time and money, invest in markets that help you make up for lost time. So you got to get in quick, I would say. Don't get stuck analyzing forever, but focus on markets that maybe have a greater chance of short-term appreciation. Again, it's not a guarantee, so you still want to make sure you have good cash flow all along, but then really focus on purchasing a property that's going to have strong resale in a market that's going to have strong appreciation. Put your capital down there. Write up that appreciation. Hopefully, 5 to 7 years, you've seen some good growth, and then implement the 1031 exchange strategy. So sell that home, take all of that equity growth that you've got in that short period of time, and then spread it out over linear markets where there's higher rent to value ratios and where properties have a higher cash flow rate. The thing you want to consider is timing, right? What you don't want to do is retire or quit your job before you've had the chance to spread that capital out if you're going to use loans to do so. So I hope that got you thinking about a couple ideas. All right, this is a good question. And I'm not just saying that because everyone says that when they read questions. This is very applicable to today's current crisis. It says, has RealWealth changed our recommended cash reserve in the wake of COVID? My friend is owed about $8,000 in back rent and counting. Luckily, she has strong cash reserves to ride this out until she can either evict or collect the rent. I think that we are in very unprecedented times. I think the moratorium on evictions has scared a lot of people. I would say that this is a big case for buying affordable property. I personally have a property right now where I've got a tenant who is taking advantage of the CARES Act as well and is not paying rent. I haven't gotten a rent check since February from them. But fortunately, this home was very affordable. My holding costs for that property are very, very low. So my mortgage payment is about $500 a month. So do I like, covering the mortgage payment for that tenant while she hides out? Certainly not. It's certainly impacting the return for this year. But it's a short-term circumstance. It doesn't change the long-term fundamentals of investing in real estate. I do think it's still a good time to buy. I think it's still a good time to place new renters, but I think you need to be prepared with good reserves. I think the amount of reserves, again, is hard to say because it depends on how many doors you have. Certainly I could float my whole portfolio without any rent checks for a very long time, but heck, the way some of these states are talking about 12-month, 18-month moratoriums, I mean, that could become a sinking boat very quickly. So I certainly get that concern. I think you got to be really cautious with reserves during this time, and don't cut yourself too tight until we get through this. But we will get through this. And another big case to buy in landlord-friendly states. We always recommend that, and all the markets that you'll find on our page are considered to be landlord-friendly states. Does your example of $700 per month in expenses include property taxes and repairs? I've found that sometimes older homes require more capital for repairs, and in certain areas, the property taxes increase quite a bit, thus reducing projected cash flow. So yes, they do include taxes. Taxes will vary depending on the market, so obviously there's some variance there. It does not include repairs. So if you've looked at our performance before, maintenance and vacancy are not usually accounted for because they're variable. How do we plan for that? So you've got to plan for that. We recommend you set aside between 3 to 6% of the rental income for maintenance and vacancies. You may or may not need all of that, but you need to be prepared for it. I think to your point about taxes increasing, absolutely something you need to consider. But what I would encourage you to think about is that if your property taxes are going up, it's because the assessed value of your property is going up. And so you probably have some debt equity there. So it's something you need to monitor. At some point, I suppose, since we know that rent prices are not keeping up with property values, at some point that's a diminishing margin. You need to manage it. If there's a crossover point where suddenly your holding costs are higher than rent, then I think that is a red flag saying 1031 exchange, time to reposition this equity because it's not making you cash flow anymore. You're not maximized on all the 5 ways that the property can pay you. So don't immediately rule out a property that has high property taxes or a market that has taxes that are reassessed every year. It's not necessarily a bad thing, but definitely something you want to manage. Do you find that you negotiate the price with the sellers that RealWealth Network partners with? The answer to that is yes and no. So the prices that our teams are offering are competitive. They're the market value of the home. The turnkey model that we use, where you're buying a property that's just been fully rehabbed or you're buying a property that's brand new, you're not getting any equity most of the time. Sometimes there is some equity, but you're expecting to pay market value for a property that's in great shape and ready to go. So, if you were to come in and try to lowball some of our teams, I think that would probably damage a relationship because they've been doing this for a while and they really understand the market value. But if you can substantiate, if you can pull comps, if you can have some real evidence that supports a property being overpriced, they're all reasonable people. I mean, they're going to look at that and they're going to consider it. And they might respectfully disagree with you and show you some comps that prove otherwise. This is still a regular transaction. No one is holding your hand to the contract to sign. So, have a conversation, engage with them appropriately about the purchase price. And then certainly if you get an inspection report back and there's problems on that inspection that go beyond your comfort level, negotiate the repair or negotiate the price, have a conversation with them to get the deal done, or walk away. Do I have archived webinars on the initial steps or process of putting a property under contract? So Derek, we do cover some of the initial steps of getting a property under contract on our market webinars. So when we do those recorded recorded market series videos, we do have them discuss kind of the transaction process. When it's escrow funds due, how much is that? At what point in the process am I ordering an inspection? So we get a little bit more specific there on each of those market webinars. Keep in mind, if you're watching this video on a public platform, again, those are some of the webinars that you have to actually become a member of RealWealth to have access to. What factors into your decision to sell a property? Do you have a minimum ownership time period? Oh, hey, Lynn, I'm glad you're back. You asked a good question last week too. Yeah, I think you got to look at it for what it is. And I don't think there's a rule to this. I think there's a lot of factors that are there. I mean, if I bought a property last year and for some strange reason that neighborhood went gangbusters and property values were super high and I could get really good money for it, then yeah, I might entertain the idea of selling a property sooner than I had anticipated. For me, the plan would be to 1031 exchange and get into, properties where I can, get a little bit better return. So I think you got to look at each situation in for itself and for what it is in its context. But I don't think there's a rule to that. I think you want to consider transaction cost. So, it's not free to enter or exit. You buy a house, you're going to pay some transaction costs. You sell a house, you're going to pay some transaction costs. So before you get really excited about $10,000 of appreciation, consider that you might have paid $10,000 in transaction costs to do that. So look at it holistically. But yeah, I think it's definitely something you can entertain on a case-by-case basis. All right. Some people echoing here, like, yeah, I'm not interested in having a bunch of doors, you know, and managing all 17 properties in that scenario. Yeah, for some that sounds like way too much, and that's fine. All right, a couple more here. Thoughts on new construction versus older or renovated? We started with renovated and now we're focusing on new construction. Jason, me too. So I focused on renovated homes first because you can get more with less. You can, you know, get really good rent to value ratios. And now I kind of have found myself shifting to the same, focusing a little bit more on newer, nicer properties. I recognize just that, you know, the stuff that had the highest cash on cash return projections was that, you know, B- or C+ neighborhoods. And I've kind of said, hey, I could maybe do a little bit better and have a little bit less time capital if I bought higher end properties that attracted higher end tenants that, you know, stayed a little bit longer and took a little bit better care of the property. So I'm doing the same. I'm kind of focusing on new construction for now. But I mean, I just saw a deal yesterday, a rehab deal that had me going, whoa, like that's amazing returns. So I would never, I think, commit fully to one or the other, but new construction definitely has my attention right now. And little spoiler alert teaser for you guys, we're working on a really cool new construction campaign where we're going to be teaching some special education classes on how to select new construction homes and where all of our teams, 8 of our teams right now are offering new construction build to rent homes. And so we've seen a huge uptick in interest in those. Building prices have come back down and you can get into something brand new with warranties in growth markets with positive cash flow. So that will be coming soon. So stay tuned, Jason, to get more of our thoughts on new construction. I did see a question here about that with regard to new construction. They asked whether or not home inspections and appraisals are needed for new construction. Absolutely. Just because it's new doesn't mean it was done right. So be sure that you're getting an inspection. Be sure that you're getting an appraisal as well. And I know that some builders will offer to just walk the property for you, you know, and they'll call that an inspection, or the property manager will go out and do an inspection. No, I still recommend getting a licensed third-party home inspector to go and give you a full home inspection report. Things are covered by warranty, so you should be able to send them back the whole report and they should be able to take care of every single item that's on that report. When do you raise your rents if you've had good tenants? Every 2 to 3 years? Every year seems unrealistic. Yeah, I kind of agree with that, Pauline. I think you got to consider on a case-by-case basis. You know, you want to consider what your turn costs would be. And, you know, if you raise your rents too aggressively and you risk that someone would leave, then I think it would be hard to recoup that. And so you've got to consider, is it worth it to risk that for an extra $40 or $50 a month? I would say no. You know, I have a specific situation right now where I had a tenant who's coming due on her lease, and I happen to know that she had struggles during the COVID crisis, and she, you know, had a change in employment, and we were on a payment plan with her for a couple months, and her lease renewal is coming up, and the property manager suggested that I raise rents, and not by much, you know, $50 a month I think was the suggestion. And I just made the decision. She's only been there for 1 year. She's been a great tenant. I really am grateful for her work ethic. I mean, during this crisis, she has demonstrated to me her commitment to paying her expenses. And I see a character trait there that I think is worth retaining. And knowing that she's in financial hardship, I made the decision, like, let's not raise the rent on her this year. Like, let's get her to sign another lease. You know, and give her a chance to get back on her feet. So again, I think you kind of got to look at that for what it is and take it on a case-by-case basis. But, you know, very quickly, if you've got a long-term tenant and you've never raised rent, then do the math and find out it might be in your favor to push your rents up and maybe let them move out, get the property up to standard again, and get it making better cash flow for you. Depends. All right. Okay. Derek wants to know if there's any LLC management webinars. Just started one to manage my family limited partnership. when I do my 1031 exchange, the property will be moved into LLCs. Just wondering if there's any video on how people are managing their properties with LLCs. Yes. Please go and check out our recent webinars. We did a 4-week series with Anderson Advisors, a law firm that specializes in entity formation and asset protection for real estate investors. So I know they do go into some of that, some of those specifics. So check that series out to get information straight from the horse's mouth. I'm not an attorney, so I'm probably not the best one to give you specific legal advice. All right. Guys, I think that is it for questions. Let's wrap this thing up. I am just so grateful that so many of you guys have stayed with us through this. Okay, so what's next? So I mentioned a lot of resources that are available on realwealth.com. You become a RealWealth member just by joining, create a login, and you're in the club. That we don't charge any monthly fees for membership. We don't make our money on education. We make all of those resources available to you. So create a login, become a member of RealWealth Network. When you create a login, you are automatically assigned an investment counselor. There's 4 of us, myself, Ben, Joe, and Aristotle. All 4 of us are investors. We all buy from these teams. We've all recently bought from these teams. So we would love to continue the conversation with you, help save you some time, help you talk through some of these. We love to play devil's advocate, be the other side of the coin for you so that you can really get thinking about some of these topics and make sure that you're making a good decision for your specific situation. That 4th one there is number 1 for me. Get yourself pre-approved with a lender. If you're serious about taking next steps in real estate, put some gas in the tank. Go and get yourself pre-approved with a qualified lender. So start with our list of preferred lenders on the investor portal, and then begin to leverage the power of RealWealth Network with the property teams. So start engaging with our content, start attending those webinars, start watching all the webinar series, expose yourself to the opportunities that are out there, and then start connecting with those teams and building your own relationship. And then before you know it, you'll be identifying your own property. So all right, guys, it was so great having you here with us. We'll have this video recorded and up on the replay section, and we'll also get it on our YouTube channel so you can rewatch it. Thanks so much for joining us, guys. Bye.